Nine Entertainment Group is today under siege with its real estate site Domain, the subject of a share market raid late yesterday. One problem for the media company is that neither Nine or Domain have a permanent boss and haven't for some months now. Joining us is our business editor Ross Greenwood. Ross, so who's doing the raiding?
Well, the raiding's being done by an American company called CoStar. So just to explain what's going on here, as you say, neither has a boss and hasn't for months. And the reality is that the timing of this raid is almost exquisite. But it also raises questions about Nine itself. So let's go through CoStar. So CoStar has actually got a business on the side, which is the second biggest real estate site in America, which is called home.com. I think we've got a little clip just to give you a little sense of what that's all about.
What is going on?
People love how the new homes.com helps them get quick answers about any property by connecting them to the actual listing agent.
This particular company is big, right? So it's last night raided Domain Group and bought 7.5% of its shares, but it's looking for more shares. And really, Nine has had questions about whether it should continue with its ownership. It owns 60% of the Domain Group. This is what its share price has done in the past year. And in comparison with that, its rival realestate.com, owned largely or controlled rather by News Corporation, which owns this network, Sky News, basically has done much, much better. So the reality is they want a whole bunch more. If we go and have a look at the Nine share price as well, because my gut feel is that Nine's in play. This is what Nine has done in the past year. Now, that $1.44 really is a big issue. But the question is what happens now, because it's all to do with its shareholders, Pete. And my suggestion to you is if Domain is the subject of a takeover raid, then potentially Nine could also, the timing for Nine to have the same thing happen to it could be exquisite as well.
There's questions over the radio division, isn't there too, Ross?
The whole thing could get busted up.
Yeah.
And a buyer could come in and basically say, we think this is worth more in parts than it is as a whole.
Together.
The publishing group could go. There's been talk about Domain going, about the radio. Suggestions are that the radio section of it is up for sale, but for a relatively small price compared with the overall business.
So this folds into the questions about the whole company's future.
Oh, it really does. And the reason for that is because of two people who have suddenly turned up on the Nine share register. So one of them is basically the man who's been there for a long, long time, Bruce Gordon, the veteran who owns Win TV. This is him here.
Yeah.
So effectively in the past week, he's triggered a deal that he had with Macquarie that allows him now to have 25.1% of Nine.
Okay.
So that's one. So, okay, just think about that for a moment.
Yeah.
Then the second person is this person, John Wiley from Tanara. Now, Tanara is a long-time agitator and tries to get businesses busted up and all that sort of stuff. They've emerged with a stake. Nobody knows quite what it is. It's under 5%, but it's something of that nature. Now, if you put the two of them together, you come up with 30%. Just a small thing. The Stokes family controls Channel 7 with 40%.
Yeah.
So you could almost control Nine with that combined 30% stake. And that is about the future of what happens there as well. Now, the final one about this is just quickly, have a look at the revolving door. There have been so many people in and out. In the past, say, this is about October, Jason Pellegrino, the chief executive at Domain, out the door. Greg Ellis is the interim chief executive. They haven't actually appointed him permanently, so he's out. Next one, let's have a look at this. Channel 9 itself. Mike Sneesby was out in September last year.
Yeah.
Matt Stanton, with all the things going on at Nine, is the interim chief executive, not the permanently appointed chief executive. Then you got Peter Costello earlier last year out the door. Catherine West came in. So, really this has been something that's been the subject of an incredible change. And again, this is the conditions that are generally ripe for significant takeovers.
Okay, we'll watch that one closely. Well explained, Ross. Now, just a quick one before we go. The unemployment rate, 4.1%. That was spot on expectations.
It was.
So does that mean the market prediction of 2 more rate cuts this year is still on?
Interesting thing. I want to show you something here, and this is a chart, and this is the long-term chart for unemployment in Australia. So this actually shows you it's really flat. 4.1%. I want you to take you back to last January. Last January, the unemployment rate was 4.1% because what happens in January, a lot of people come out of the workforce and decide to take the month off. It's summer, it's nice, the kids are off school, they take. But have a look what happened in February. Unemployment rate fell to 3.7%. Now, if we go now to money markets and the expectation of the next rate move, what you can see is right now markets are saying it will be on hold, 90% chance of it being on hold. So if the employment numbers get stronger during the course of this year, as they did last year, guess what? You might not get 2 more rate cuts. You may get 1, but maybe not 2.
Would there be talk of a rise again?
well, if it gets super strong and
Yeah.
if it starts to increase wages, but yesterday, or earlier this week, those wages numbers were pretty suppressed, so that's not the talk right now.
All right, well done. Ross, thank you as always. We'll chat again soon.